Hello and welcome. Before we begin, I want to give everyone a minute or two to log in, as we're expecting a high audience number for this webinar. So I'll give everyone 30 seconds and then we'll do a 30-second countdown that appear on your screen, and then we'll start with the webinar. Whilst we are waiting for everyone, I just wanted to remind everyone that today's webinar is being recorded and a version of the recording will be sent to you afterwards. Please engage as much as possible by asking questions to our panel. And if you have any audio or visual issues, please remember to message in the chat box. I'll now start a 30-second countdown and then we'll begin.
Hi everyone, welcome to our webinar today on fair dealing in the APAC region, really kind of considering how consumer duty may be going global. Before we kick off, I just thought I'd give you a brief overview of Vixio. So we're a regulatory technology company focused on independently sourcing information across various jurisdictions, 140 to be precise. We look at all things related to compliance and regulatory risk, supporting payments businesses globally. So I'd like to introduce myself. So my name is John Gidler, Head of Payments Compliance. I'm joined here by my esteemed colleagues. So I'll hand over to them before we kick off.
Hi everyone, my name is Kinnari Gurnani and I head up the APAC and Middle East and Africa practices at Vixio.
Hi everyone, I'm Prasad Tandapani and I'm an analyst here at Vixio with a special focus on the APAC region for the past 3 years or so.
Thanks, Prasad. So I think to kick off the webinar, I think it'll be interesting to understand what exactly the fair dealing rules are. And in each of these countries, could you kind of give us a brief overview of the nuances in the rules?
Yeah, so maybe I'll take that one first. So we'll get started with Singapore and Malaysia and then talk about Hong Kong a little bit later, and maybe you'll see why. So Singapore and Malaysia, from a fair dealing rules perspective, pretty similar. In Singapore, actually, these rules have been around since the global financial crisis, so since about 2009. And it all essentially has to do with customer protection mechanisms. It essentially sets out these rules to make sure that customers have confidence in dealing with financial institutions, ensuring that those products are well targeted towards customers, communication from these institutions is clear, and complaints are handled effectively. Now, like I said, rules have been around since 2009. Why are we talking about them now? Because basically the financial regulator in Singapore, the Monetary Authority of Singapore, has recently expanded these fair dealing rules, essentially a couple of months back in May, to bring in all financial institutions under its ambit. So this essentially includes accredited and institutional investors, corporate financial advisors, security brokers, and of course, importantly, for what is probably the majority of our audience today, payment service providers. Now, the recent update to these rules also emphasizes the role of the board and the senior management in setting a culture for these financial institutions so that they are able to determine their own risk appetites, put into place the right policies and processes to essentially ensure fair dealing outcomes for customers. Moving over just across the causeway or the border to Malaysia, Malaysia's guidelines are actually, like I said, pretty similar to Singapore's in both its objectives as well as its scope. And as a result, of course, they do include payment service providers as well. Malaysia's guidelines, incidentally, also been around for a while, since 2019. recently expanded in March of this year as well. So as you can see, both of these jurisdictions and regulators tend to move pretty well in tandem with each other. Of course, we are scheduled to talk about another jurisdiction today, which is Hong Kong. Prasad, maybe I'll ask you this question, and maybe like we say in Southeast Asia, could you highlight how Hong Kong is basically same but different to these two?
Sure. And as a Malaysian, it's nice to hear a bit of Singlish or indeed Manglish all the way here in London. Well, Hong Kong is pretty similar to both Singapore and Malaysia in the sense that they do have a set of fair dealing guidelines. However, at the moment, they currently only apply to banks. This is not the end of the story, though, because the Monetary Authority of Singapore, the Hong Kong Monetary Authority, and Bank Negara Malaysia really are the leaders in terms of financial regulation in the APAC region. As such, any initiative initiated by any one of these regulators, more often than not, is followed in suit by the other two. So it really is a matter of signposting.
Okay. I think that's an interesting one that you talked about, which is signposting. Could you give any other examples of where two of them have followed the other one?
Sure. So recently, I think we had the launch of Singapore's Project Cosmic in October 2023 as part of that year's edition of Singapore FinTech Festival. And what Project Cosmic allows banks in Singapore to do is to share AML information between each other. Now, Hong Kong launched a similar platform to this a couple of months ago. The same can be said of the stablecoin regulations that Singapore announced again in October 2023 and launched about 3 months ago. Hong Kong has launched its own version, or at least a legislative proposal for it, about a week ago. So we really see these regulators moving in tandem. So John, you've worked at the FCA, and that tends to be the setter of global benchmarks as such. Could the same be said for consumer duty? A lot of people have made comparisons of consumer duty to these fair dealing guidelines. Could you give us a brief overview of what exactly consumer duty is and perhaps how it relates to these fair dealing guidelines?
Of course. Thanks, Prasad. I think it's probably worth actually taking a step back and thinking about treating customers fairly. One of the core principles from the FCA in terms of looking at how businesses and financial institutions treat customers, a very customer-centric approach. Fast forward to where we are now, and the consumer duty regulations have come out, where some could argue to be slightly prescriptive, but again, maybe the new principle in terms of how businesses should operate. The four key pillars of consumer duty are looking at products and services and really looking at the product life cycle and thinking about how I put the customer at the forefront of my decision-making processes. Also a very interesting one is price and fair value, where ultimately you think about how do businesses kind of price their products? Are they providing good value for their customers? And is it fair with a very customer-centric approach? Consumer understanding, we're moving into the tech proposition, everything's going online. Is there sufficient support in place for customers to really understand what products they're buying and what services they're receiving, which in tandem goes into consumer support. Businesses are focused primarily on being online or moving to that way. But how do your customers speak to you? How do your customers actually engage with you on a day-to-day basis? I think if we think about that from a parameter of consumer duty, fair dealing, it's really positive to see that global regulators are all thinking about putting the customer at the forefront of their decision-making processes and looking at businesses from a sense of saying, actually, it's not just about commercial-driven outcomes. We're thinking about, are you providing value for your customer and protecting your customer?
Yeah, that sounds good. Maybe we can also move into elaborating on the similarities between the payments markets across Singapore, Malaysia, and Hong Kong. Prasad, maybe you'd be a good one to take that.
Sure. So Malaysia, Singapore, and Hong Kong really were at the center of the super app boom we've seen in Asia over the past 10 years or so, with the rise of e-money and e-wallets in these countries, bringing contactless payments to millions of people who previously had very little interaction with the formal financial network. And when I say very little interaction, I mean very basic interaction. Now, Singapore, Malaysia, Hong Kong all had very established card networks and all had very high rates of financial inclusion. But most people's interactions with their banks were simply to withdraw money for cash payments.
Absolutely. And it also looks like a very peculiarly Asian trend here, where basically all of these millions of consumers in Asia essentially skipped the card phase almost, but then went straight to the digital payments phase, mobile payments, etc. And maybe even moving beyond the countries we're talking about today. We've got India and China as well, basically essentially on the forefront of mobile digital payments.
Absolutely. In Singapore, Hong Kong, and indeed Malaysia, e-money payments are nearly double those of card payments. And what this really shows us is that people are moving from cash for small transactions to e-money payments, and it's reflected in the average value of the transactions. Now, this means millions of vulnerable people are getting into regular contact with a financial institution for the first time. Now, the flexibility of an e-money license allowed all these firms and super apps to build huge amounts of market share in the past 10 years. But I think regulators in these countries where this has happened are beginning to sort of wake up to the fact that this may be a ticking time bomb, and they need to do something about it to make sure that consumers are protected. This has taken a number of forms. So we've already talked a little bit about the fair dealing guidelines, but Singapore, for example, has introduced a shared responsibility framework, allocating responsibility or allocating liability rather for scam losses in between the institution and the person who suffered the loss, depending on whose fault it was. Malaysia has introduced product transparency and exposure draft, and Hong Kong has introduced a number of cybersecurity related guidance pieces and practice notes for its stored value licensees. It wouldn't surprise me then that the fair dealing guidelines, which at the moment, John, you remarked, more closely resemble the TCF principles in the UK, eventually become just as comprehensive as consumer duty is, as we move towards e-money really becoming almost a second bank account for most people.
Thanks, Prasad. So I think also it'll be interesting to, as you mentioned, in terms of the transparency model and for shared responsibility, that's quite similar to the APP fraud model that's potentially coming out very shortly in the UK. Did you have any thoughts about what the uptake is from businesses? Is there any noise in Singapore specifically?
I think Singapore was probably not be the best benchmark to look at business feedback or pushback. But I think generally businesses are aware that people are getting fed up of losing money to scammers based on failings that are not their own. So I think businesses are trying their best to minimize scams, because it's good. It's not only good for them from the shared responsibility perspective, but it's just good from them. It's just good business sense. If you want customers, you need to ensure your product is secure.
And then, Kinari, in terms of thinking about vulnerable customers as we're evolving into the e-money framework that we're looking at, as we're seeing the uptick of usage, as Prasad's quite rightly pointed out, what's your thoughts on how do you ensure that stays stable and consistent? More people are using it. We're seeing vendors now on the street who used to take cash are now taking or using merchant facilities to take payments. What's your thoughts?
Yeah, absolutely. I think as with any new large scale innovation, there are maybe two sides to this coin, which is you have on the one side the establishment of the infrastructure, which has to obviously come from businesses as well as regulators, and then on the other side you have a cultural mindset shift on the side of consumers as well. And very happily we've seen this take off really nicely, I would say, in many parts of Asia. Again, we were talking about the fact that maybe the card side of things, even though it's way more developed, you can say in the West, maybe in developing APAC, that wasn't really the case. But now we've got that come through in a very sophisticated fashion in Asia. So both of these things have worked out quite well in tandem, and it's that's the reason I would say for this large uptake, and ensuring that this uptake is here to stay.
I completely agree, and I think it's interesting from a financial inclusion perspective. the world where we used to live in, where cash was king, should we say, and looking at kind of established markets in the APAC region where cash used to be king, but it feels like definitely from my recent trip, everyone's using card or mobile payments, and in fact, I got frowned at when I took some cash out to buy a coffee because that's not the way forward.
Mm-hmm. Yeah.
Did you guys have any other comments or last before we close off the webinar today?
No, I think we've covered the fair dealing guidelines quite comprehensively, and it's been interesting to see how they are evolving and will continue to evolve in Asia as time marches on.
Mm-hmm. Yeah.
Great. Well, thank you all for listening today. I hope you found it insightful. It's very positive to see that the markets are moving towards a customer-centric and customer-at-heart journey. We look forward to speaking to you next time.
Thank you very much, John, Kanari, and Prasad. And of course, thank you to our audience for attending today's session. As mentioned at the start of the session, this webinar was recorded and a video will be sent to all attendees in the coming days. Now, before I sign off, I wanted to remind all attendees to stay tuned to Vixio Regulatory Intelligence on LinkedIn. On Monday, August 5th at 2 p.m. BST, Vixio will once again go live with a regulatory roundup of the latest payments news. Finally, if you have any questions about anything to discuss in today's webinar or like any further information, please email info@vixio.com or visit our website vixio.com for more information. Thank you.